Hello, and welcome to myfinanceteacher.org. Let's have a quick emergency update on precious metals. Emergency update on precious metals because gold, as you see over here right now, is breaking below its recent low from the middle of January. That was at around 1810. Gold right now is at 1807. And 17 days into this ongoing short-term daily cycle, this is not really a good sign. This possibly indicates that the ongoing second daily cycle of gold has already reached its peak after only a couple of weeks. And if this second cycle of the ongoing intermediate cycle has already peaked, usually these short-term daily cycles last for 1.5 to 2.5 months. That means we probably would have quite a while of at least a couple of weeks of general downward momentum in gold. At a larger intermediate outlook, this drop also gives me a chance to talk about the question recently raised by a member at myfinanceteacher.org. The question was about this upcoming potential death cross where the 50-day moving average crosses down below the 200-day moving average. If you look at history of the previous bull market in gold, that's between early 2000s and to around 2011, there were actually several instances of a death cross. Over here, for example, in middle of 2004, again in the middle of 2005, over here near the end of 2006, and last one over here in the middle of 2008, with the next death cross actually indicating the end of that previous bull market in gold. Now, looking at the death cross that actually happened during that bull market, what I see is that over here in 2008, when gold was already dropping significantly when this death cross took place, that's when that intermediate cycle in gold led to significantly lower prices. From the time of the death cross until the eventual end of that intermediate cycle, gold dropped by an additional 19%. Whereas in all other instances of the death cross during that bull market, by the time death cross took place, gold was actually already rising into the new intermediate cycle. I think most would agree that gold is actually in a bull market since the end of 2015. After all, since then, gold has actually nearly doubled in its price. And the first death cross within the ongoing bull market took place at the end of 2016, when gold was already dropping, and that drop continued by another 9% since the time of that death cross until gold reached the end of that intermediate cycle. Same thing happened in the middle of 2018, with gold price dropping at the time of the death cross, and again eventually gold bottomed at around 19% lower. So generally my opinion on the upcoming potential death cross is that the performance of gold price just around the time of the death cross is likely to indicate whether this death cross is going to have a significant impact on the market or not. And in this light, it's actually quite negative having gold drop today so significantly when it's already below 1800. What this unfortunately means is that there is actually a chance that this intermediate cycle in gold is going to continue lower for several weeks until gold reaches a bottom, perhaps several percentage points lower as it did at the time of the previous death cross when gold price was actually dropping. So looking at some of the potential support zones below the current price, that would be the summer highs at around 1750, which is most likely to be broken if this intermediate cycle has actually topped. Hence, the next support zone below that would be from autumn highs and summer lows, somewhere at about 1700. So unfortunately, gold has actually been performing quite poorly over the last half a year or so, and even after such a significant decline, the risks are still pretty high. Looking at optimism index on gold, it's at 55 as of the close yesterday, and after a significant drop today, I'm sure it's going to drop even further. A couple of previous intermediate cycles bottomed when this optimism index was around 50-ish or so, but if you look further back into history, intermediate cycles usually tended to bottom when this optimism index is somewhere around 30, so there is still a potential for a lot more pessimism in the market. At least what I like is that silver is outperforming gold, and silver is still giving us higher highs and potentially higher lows depending on where this drop is going to take us. The line in the sand to watch is around 24.2. Perhaps some of the industrial demand for silver will prevent silver from giving us a significant drop down into the intermediate cycle, while gold might actually continue down into that low. which is of course unfortunate. And what I'm going to do with my personal portfolio, as well as a fictitious portfolio at myfinancesteacher.org, is I am going to take partial noticeable losses on gold miners and convert a big chunk of my precious metals related positions to assets that are specifically related to silver, while I would still hold some of the smaller core position in gold related assets as well. And even if the risks on gold don't realize, if we see a bounce anywhere from here, there will still be plenty of chance to get back into gold, or even continuing to stay in silver into any kind of intermediate cycle rally, if it actually happens. So what I'm doing right now is I'm trying to be patient while I'm waiting for the market to open, and it's quite disappointing that this red candle on gold keeps growing bigger and bigger. And that is my opinion on precious metals. Let me know what you think, whether you like silver here or you're for dumping precious metals altogether. I'll try to make sure to reply to all comments. In the meantime, have a nice day and good luck in your trades.